Good day. Ira Epstein of Linn and Associates with your SPDR ETF wrap-up. This is your weekly edition, and this is for Saturday, November 14th, 2020. Well, you know, I'm into the winter months now. It's 32 degrees this morning in Chicago, so that gives you an idea. No snow, thank God, but it gives me back my winter verve. That's the way to call it. This week we had some decision-making to make in the markets. The COVID-19 cases, both in Europe and the United States, are reaching epic proportions. It's rampaging through cities. The president came out on yesterday, Friday, and said that under his administration, there will not be a national shut-in. Well, that means he opened the door for the Biden win, which we know has happened. Biden is our president-elect, and he will be in the office, barring some miracle the president can pull out, which I don't believe will happen. Therefore, it'll be President-elect Biden's administration that might make that decision, but time's on their side. Why? Time is on their side because we're getting into this surge right now. And the surge is what we learned in the spring. If people stay in, if they shutter, there's different things. Plus, we have a vaccine from Pfizer, BioNTech, and we might hear something from Moderna any moment. And the difference between the two seems to be the length between shots. That's so far what we're hearing. And the freezer capability. One needs 70 below zero, the other 20 below. I went out and I priced what those freezers cost over the past 2 days. They seem to run, from everything I'm reading, between $5,000 and $19,000. That's not as much as I thought. I thought we were talking big numbers because the infrastructure couldn't handle it. So let's assume you're in a city and you put several of them at different main hospitals. That seems to work. Or centers. Now, I'm just saying several. You know, in a big city like Chicago, you're going to be dealing with way more than that. I'm talking cities, villages, whatever it might be. My point is, it can be done. And my point is, we're not talking the numbers I thought it would take. However, the freezer manufacturers, in the same articles I was reading, they're already overwhelmed. People aren't waiting. They're not listening to the CDC or the SPDR. They're buying these freezers. The worst that they did is make a bad $5,000 to $19,000 investment, which also means trying to get one is now hard, and the backlog is months. So that's what seems to be happening. Next, what happened on Friday? I think what happened on Friday, the market had to make a decision for itself. Does it go into the weekend prepped for the bad COVID news by dropping, or does it go into the weekend saying, that's fine? I'm going to look at the market down the road. We're already November 13th, and what's going to happen is we're going to get that vaccine sooner rather than later, and that will mitigate all these numbers. That's what I think the market did. So the up day, that's it. It also tells me that switched viewer and trader mentality, viewer of these videos and trader in the markets, to what? The buying of breaks rather than the selling of rallies. Glass half full, half empty scenario. Let's go to the chart action. XLK. First, I look at the action here, and the market's made a recent higher high. When I go to the swing line, and again, these are all weekly charts, I have higher lows, now a higher high. That's bullish. So I'm in the bull camp on the swing line. When I look at 18-week moving average of closes here, the 100-week, and the 200-week, when a market is over the 18-week average of closes, that determines bias. When you're over it, bullish. When you're under it, bearish. It's a filter on a swing line. So I have a bullish bias on pullbacks. That's also a support number. Where's the resistance in the market? I next go to Bollinger Bands. Why? 95% of the time, the market will trade within a Bollinger Band. Yes, it can get over it 5% of the time, and some markets do stay over it more often than others, but not more than 5% of the time. So I look to see what the history of the market has been. Market likes to stay within the band. On the bear camp, it got under it, but on the bull camp, it tries to stay within it. You can see that here. So I think we're at a resistance point. Got that? Yes, you can pop over it. There's no reason to be bearish, but I think there's reasons for the bulls to have taken money off the table, and they put their ammunition ready to buy again. By the way, you'd have to take out 109.57 for me to change my opinion. When I look at the XLK, momentum is no longer oversold. This is how the market was acting the past 2 weeks. Now that's changing. So I also have here higher highs, higher lows with stochastic. If we come back, you see that right there. That's all tied in. XLI, higher lows, higher highs, over the band. Okay, I'm excessive right now. That's what it tells me. If you were my client and I was doing consultancy with you, would I tell you to buy over a Bollinger Band? Absolutely not. I'd be telling you peel off positions. You can keep a minor core, but get your ammunition ready to buy again. Where am I wrong in my thinking? If you get under 74.64. Where's the support? Back at the 18-week average. Momentum trying to embed. Both numbers are over 80 this week. Last week, both were over 80. I get one more week and it's embedded, and it could even just hang at that Bollinger Band to work higher. So I'm in the bull camp. In the energy sector, when you get to a Bollinger Band, what are you supposed to do? Cover shorts. If the market wants to get back in a perfect wheel to a neutral number, and it doesn't always, in an over embedded reading, and you lose the embedded reading, where are you supposed to go? To the 18-week average and try to refigure what to do. Is there a trend at work now? No. The market is absolutely neutral. It has a lower low and a higher high. QQQ. You have higher lows, higher highs. What number are you up to? The upper Bollinger Band. Are you supposed to buy a Bollinger Band? No. What are you supposed to do against it? Come on. Take some money off the table. By the way, I'm going to hold a live webinar this coming week. If you're in my mailing list, you'll be getting an invite to it. They fill up. I keep the seating very limited, and that's how it's going to work. And by the way, I charge a small fee for it. So you get the invite. Don't think it's free. If you're a paid subscriber of mine to any of my research products, 100% free. Not, you're invited. So we get up here, looking at the upper Bollinger Band, away you go. By the way, the invite, I think it's $2 or something. So I'm not going to break the bank, but I know there's a certain element of people out there, they want everything free. I don't want to deal with that. Emerging market, lower low, higher high, over the upper Bollinger Band. I know that the world wants to be long emerging markets. You keep hearing me talking about it on my daily views, and that is the case. But you're over that number. This market doesn't end well over that number most of the case. Let it pull back. Let it get into a trend. We had a battle. The market, and let me show you the battle. The market's been fighting in the 200, the 100, and the 18-week moving average of closes for weeks on end. Do you disagree with that? Back and forth. Now it's trying to get away from it and say, okay, this is good action. What else is happening? I think you're going to see the 18-week average cross the 200 for one of the crossovers. Ideally, you'd get the 100, you'd have the 18, the 100, and the 200 under it for a real bull market. But I do think this is shaping up to a very big bull market. In GLD, the market is still not trending. You have a higher high, see that? A lower low. Momentum is still pointing down. It's still nothing, folks. I know you want it to be something, but it's not there. This is a spot to cover the shorts on the gold miners when you hit the lower band. So that's a good piece of news. The market did that before. You got a big bounce. You went to the 18-week average. Think of a pinball machine. You tilt it. When you hit that 18-week average, you hit the reset button. Now, if you hit it again, same thing. You're supposed to be coming out of that. Got the ideas there? SLV, you know I'm friendly silver if you saw my report. You have the pattern of higher lows, higher highs. The only thing missing are two things. I need a close over 23.27, the 18-week average, and I need momentum to turn up. If that occurs, I start looking wherever the upper Bollinger Band is for the possibility there. Let's throw this the other way. What if I'm wrong? And by the way, I do get wrong. Well, anything under 21.27 means I should go to the drawing table. I'm wrong on that analysis. TLT, I am bearish these markets. Why? The market is looking beyond. I just said that in COVID, what it's looking at. Well, the market is looking at the Biden administration, not at the Trump administration. The market is looking at who's going to be the next cabinet, what the agenda is going to be, and it's going to be more spending, which we need. Economies all over the world need their governments to spend to get them out of this malaise that we're in. The market is going to look at growth coming because of that. Well, that's not the pattern of low interest rates. And the marketplace is fighting with the Fed. The Fed wants low interest rates. Is low a relative term becomes the word. But each Bollinger Band hit is giving you a bounce. You had last week an outside week up. If you take out the low of an outside week, it is a bull trap, and the market often goes to the closest of a Bollinger Band or a moving average under it. The word is often. I wish I could tell you it's all the time. In this case, it did exactly that, and away it went. Charting is probabilities. It's no different than you dealt a hand of blackjack. What are the odds if you got a 9? What if you got an 11? Are you supposed to double down? What if you got 2 aces? It's the probabilities. Got it? That's what charting is, the same thing. You get a pattern, you remember what it is, you get a swing line, you get an embedded reading. What are the probabilities of that? That's how I look at the marketplace. I don't keep those numbers as probabilities, but I understand the pattern is what it's supposed to do. I imagine if I kept the number, it'd be even better, but I'm not that good. If you take a look, higher high, lower low. You came down for the challenge of the 200-day average, didn't quite hit it. Went back then to the 18, holding it. Market's not in a trend. All right, so no trend. We just wait and see what that all is going to mean. But you could be in a trend. What do I mean by that? You know, the one thing I do for you in the afternoons is at about 3:30, 4 o'clock, I record a 20 to 25 minute video of what I'm seeing that you should be doing each weekday for the shorter term, the swing trader, and the longer term position trade in spiders and ETFs. And in that, I'm covering now close to 40 charts at a time. Each Saturday, I'm going to be putting out for my, in fact, I did it yesterday evening, one of them, I start putting out my weekly subscriber videos. And that's where I cover the longer term and the weekly charts only, no daily charts. So there's a lot of you that just want those weekly charts. There they are. You might want to tune in during the week. What's Ira thinking where we're at right now? You get it. It's very different than these free videos. Understand what you get here. Free. Understand what they're getting. They're paying me. They're getting depth. I give them as much as I possibly can. And the idea is you can watch it from your tabletop. We give you an app. We normally charge for our app anywhere between $35 and $60. It's included in my subscription. I cover all of this and more for you government traders, people in the government. I realize you can only do certain bonds, certain stock indices. I've covered them all. We'll put up on this just what we're doing for you there too, because you're able to work with that back and forth, and we want to cater to that market for you. The cost of this is probably a little more than a Starbucks cup of coffee, the bigger one with a tip. $8.95 for 30 days. What's that worth? What's one idea worth? So I realize for certain people, I'm not going to pay for anything on the internet. Don't watch me for that. You want the meat of what I'm doing? This is what you've got. How do you get it? And by the way, how often? Every day of the week, Monday through Friday, and Saturdays. What else do you get? Free access to my special reports. If you went and saw my silver report, some of you saw that you had to pay for it, not my subscribers. When I throw a live webinar, you're going to say, well, it's a live webinar. I don't want to pay. It's free to my subscribers. I cater to my free subscribers. These videos are the feeder to give you that nudge. Come on, join us. It's not going to break the bank. How do you get it and how do you find out more? Go to www.iraepstein.com. Under the word research, it's there, or God forbid, you can call my staff. They will pick up the phone and talk to you. I'm Ira. You have a great weekend. I'll see the rest of you in my weekend my weekend subscriber videos. I'll be doing those next. You have a good day.